All right, I think that it is recording. Alrighty, well, welcome. Today is Saturday, June 20th, 2026, and this is going to be the first video that I post on the channel. Now, I'm sort of conflicted as to what exactly I am going to post here. Originally, this channel was created so that I could post trade breakdowns, my weekly outlooks, my trades in general, any payouts or withdrawals that I had. But that fizzled out, and I never ended up really using it to its full potential. And now, with me posting on Instagram, I might as well start posting on YouTube as well, because maybe someone out there could find some value with it. And at the end of the day, it's just a nice spot to have my thoughts, right? It's like almost like a journal, if you will. Now, I'm not certain as to what I'm going to be posting on here yet. What I will be posting consistently are my weekly outlooks. So just my thoughts on the financial markets going into the week, what I'm expecting in terms of the political landscape and how it might affect the markets, and how that might affect my trading. I'll speak on all of that. As to what else, I'm not sure, right? Maybe I'll post trade breakdowns. Maybe I'll post my entire trades that are screen recorded on my MacBook. I know some people like seeing those instead of the screen recorded phone trades. But we might as well just get right into this. So here you can see, I'm pretty sure you can see my screen, we are taking a look at a screenshot right off of Forex Factory showing us the scheduled economic data releases and speeches for the upcoming trading week of June 22nd to June 26th. Now, I'm a huge advocate for not trading on no news days or not trading on days where the probabilities are stacked against you. And Monday seems to be one of those days, right? We have no news, and not to mention it is the trading day after a bank holiday, and normally the trading days after a bank holiday tend to be disgusting. And no news Mondays, right? The typical characteristic is that it's in discovery mode. So there's going to be a lot of back and forth, a lot of seek and destroy type of price action. So it's going to be a day where I avoid, and I am okay with missing a phenomenal move if it does happen to take place, because that's what you need to do as a trader, is to minimize the amount of losses that you take or minimize the amount of trading time, especially during days or during times where you can reasonably discern that it's going to be less likely in your favor to win. And Tuesday doesn't really look any better. Now, it is PMI. PMI is generally high impact. I'm curious as to why it's listed as a medium impact. I'm assuming it's because of the current Iran-US conflict. But it is going to be the day after a bank holiday, which I'm anticipating better price action. So I will be risking on this day, but I might be half risk, or at the very least, I'm going to be super selective about my setups. And the way I'm selective about my setups is if I'm exceedingly bullish on the day or exceedingly bearish. Let's just say, for example, I'm exceedingly bullish on the day. I'm only going to be interested in seeing a long setup form, and if a short setup forms, even if it's mechanically beautiful, I'm going to fade it, because that's me being selective about my setups. I want to, of course, minimize my losses. Now, Wednesday, it's unfortunately not looking better either. It's going to be a no news Wednesday. However, this is going to be clear of the post bank holiday conditions. And by this time, it's going to be the middle of the week. Price should be or could be moving. It might be clear as to where price wants to go for the rest of the week at that moment in time. So yes, although having no news there as sort of like a means for volatility, because it's going to be in the middle of the week, there might be less ambiguity around the trading day. So it will be another day that will receive risk from me. Thursday is going to be, or at least should be, a decent trading day based off of the economic forecast. We have price index, we have final GDP. Now, here's something to take in mind, is that with what happened during the FOMC meeting and also what is going on with the Iran conflict, just to keep it short, the FOMC meeting stated that we probably will be seeing rate hikes for the next 3 decisions or 2 decisions, I think it was, which is mainly due to the fact that we're overinflated. And of course, that's going to affect the GDP, meaning that we should reasonably expect bearish news from the 8:30 a.m. news release on Thursday. We could see a pretty trending day on Thursday, which of course I'll get into talking about a little bit more as these videos go on. But I utilize 2 separate trading models, one that's more specific towards range type of price action and another that's specific towards trending type of price action. But on Thursday, we also have unemployment claims. So there's going to be a large injection of volatility heading into Thursday's trading day, which should perk up decent trading conditions. And on Friday, Fridays all really depend on how the entire week has been trading up until that point. Even if there is medium impact, it could be a disgusting day or it could be an amazing day. Who knows? But the only day that I can tell you with confidence that I probably will avoid at all costs is Monday, because it's the day after a bank holiday, the trading day after a bank holiday, and there's no news, so it's not really looking the greatest. But we'll go ahead and we will delete this. We'll start the price action analysis. So we're taking a look at the E-mini NASDAQ futures, the micro, doesn't really matter, micro, mini, they're both pretty much sharing the same information here, or showing the same information. So you can see us on the week of June, the first week of June, we traded lower, making an attempt to get to this weekly buy side imbalance, sell side inefficiency. And this was the day or the week that we had extreme heaviness lower. Then the very next week, we saw us trade down right to the consequent encroachment of the buy side imbalance, sell side inefficiency. And we saw an immediate recovery going higher, closing as an up close candle. And we followed through, pretty much heading into the previous week. And then last week, we had a sort of lower volatility day in terms of week in terms of range. So at this point in time, when I'm looking at the weekly chart, I can, with a certain amount of confidence, tell you that we should be heading to all-time highs. However, when we drop down to a daily chart, the information, it's sort of harder to tell. And I'll say exactly why. When we look at the other indices, that being ES and YM, there is an SMT that's forming at these highs, or that could potentially be forming at these highs. This is exactly what they did last time we were at all-time highs. So, wouldn't be surprising if we do fail to take out this low on this high on NQ. So, we found us trading down into the bullish daily suspension block and on Wednesday, failing to touch consequent encroachment, expanding higher, but we pretty much remained in this tight range. Actually, if you really want to be specific about it, we remained inside of the range of Monday for the entire week. As far as bodies go, the wicks, we did trade outside of it. Now, this is important to understand because if we were bullish, I would have expected price to just have one straight shot higher to the buy side and make another high. And I did mention last week and during last week that we wouldn't revisit all-time highs. Now, of course, I'm not hard-lined to see that occur, but I wouldn't be surprised with how manipulated these markets are. We could very well leave these relative equal highs intact. Now, it all depends on how we trade around the suspension block if we even get to that level. If we get to the suspension block again, and we happen to trade beneath its consequent encroachment on a closing basis, that's when I would start leaning heavily to seeing lower prices rather than higher prices. In my opinion, if we were to see higher prices, we would need to see an immediate expansion higher heading into like Monday and Tuesday to all-time highs, and then beyond that to really be bullish for the rest of the week. And even at that point, once we clear out all-time highs, I'll be sidelined really, because I don't want to trade all-time highs again unless the conditions are pretty clear to me. But if we do get beneath this low and we get beneath the consequent encroachment of the daily suspension block, that would be chef's kiss. That would be amazing. I would love that, and I'm sure everyone else would love that as well. So I'm not hardline to really see anything at the moment, but gun to my head, I say that we go back to all-time highs. I just wouldn't be surprised if we trade lower and we end up seeing lower prices instead. Also, another thing that happened over the weekend, or I think it happened today, Israel bombed Lebanon again, which is pretty much disregarding the peace agreement. We're not going to get too political here, but it seems like Israel does not want to hold the peace agreement true. So that could be a potential news driver. Like, we could gap significantly lower on Sunday at 6 p.m. And I wouldn't be surprised if we do. But like I said, I'm not hardline to really see anything specific play out in the marketplace at the moment. So for now, we're neutral. Now, if we go ahead and take a look at the 4-hour chart. So once again, we're just looking at these charts just to get a better idea of what is likely to occur. So here's that same buy-side liquidity pool. You can see how clean it is in terms of highs being relatively equal with each other. But these lows down here too just look way too fucking clean. And ICT has specified that whenever you have price trade beneath the consequent encroachment of a large wick, at some point you always expect price to trade beneath the low. Now, of course, we did end up fading that here, but we could reasonably see price really get heavy this week and expand beneath these lows. Just saying. Now, price is traded higher. This sell-side imbalance, buy-side efficiency is turned inversion. The reason why I'm using this instead of this is you can see the algorithmic signatures that are forming around these price levels. You can see us booking the consequent encroachment, failing to reach the low here, and then we see an expansion, then finally a close above this, confirming it as an inversion level. Then we see our gapping higher plus expansion, which creates a large buy-side imbalance, sell-side efficiency. And pretty much for the entire week, we were bouncing in between this sell-side imbalance, buy-side efficiency, and this buy-side imbalance, sell-side inefficiency. Whenever we are bouncing in between these areas, right, we're in a compression, you usually expect price to really expand in one direction. As to whether that's higher or lower, no idea. But you can see we're being held in sort of this, what retail would call a bull flag. This is also another reason as to why I think price might spool lower, because we always fail retail logic. In this case, you can see us forming a bull flag. That is a smart money trap, or a retail trap. Here is the flagpole, and you can see, I'm not really going to get too retail here, but you can see here is the, here's the flag, right? We're compressing in here, and retail would want to see us go higher. And not to mention, we are at all-time highs. So that's an extra confirmation as to price going higher. And that's for retail. Now imagine if you're smart money, you're engineering all of this sentiment that, hey, price is going to go back to all-time highs again. We're forming a bull flag. We've been pretty bullish for the past, couple of months. And we just signed a peace agreement with Iran and everything's all great and everything. You engineer that sentiment, and that gives retail the opportunity to just rake everyone across the coals, because now there's enough liquidity generated so that they could just send this thing lower. Once again, I'm just saying that could happen, and I believe that is what is likely to happen. But just right now, it's really hard to call that and say that is exactly what I'm expecting because of how close we are to all-time highs. All of that can be completely disrupted. But once again, we're in a bull flag right now. Smart money would completely run this against everyone trying to go long, right? People have their stops rolled beneath here, and rolled beneath these relative equal lows, right? Or we could just get an absolutely perfect, gorgeous reversal after we sweep all-time highs, and then we roll over. That could be nice, but I really wouldn't expect that to happen. If we get back into all-time highs, I'd assume that we're going to keep pressing into all-time highs. So let's go ahead and hop into a 15-minute time frame. The 15-minute time frame, this is our bellwether chart, as ICT likes to describe. So this is the current range that we're working in, from high to low. If you draw that out, you can get the range levels. This is the equilibrium price point, that 0.5 level, that red line, and you can see we are above it. Now, I'm not much of a fan of utilizing OTE, not because I don't think it's a good concept, because it's not something that I have great experience with, but if we are bearish, we are technically inside OTE. We are inside optimal trade entry. And at this point, we would reasonably expect price to work lower. Not to mention, there happens to be a 15-minute sell-side imbalance, buy-side inefficiency that is sharing almost identical levels with OTE of this current range. Is that random? I don't think so. And I think that we might find some resistance here at this 15-minute SIBI rollover. And if we can get beneath this BISI on a closing basis, turning it into an inversion level, I think we'll utilize that to send price lower, attacking these relative equal lows. They just look a little too clean for me. And then eventually to this low. That's where I think we will begin heading. Now, we could just spike up, take out the buy side, still remain inside of the SIBI on a closing basis, and then rotate lower. That's completely permissible. But what would dismiss the idea of seeing lower prices is if we trade above these relative equal highs and we close above the sell side imbalance, buy side inefficiency. That would tell me we're going to head back to all-time highs one more time. We look at the 5-minute chart here, and I go to the regular trading hours chart on the 5-minute. So here are these clean relative equal highs that were left on Monday. It's not these same highs up here. Now, they are super clean, so I wouldn't be surprised if we do go up and want to sweep that. Either way, even if we don't, look what we have. We have a means to see price work lower, that being the regular trading hours opening range gap from Thursday, June 18th. You can see we pretty much left an entire half plus a little bit more completely left open, which, price likes to fill in these inefficiencies. And price should and could utilize the levels, right, as inversion levels. If we trade past it, we bump it up and then we trade past it again, utilize it as premium sensitivity, and then we roll over. And these lows down here, look how fucking clean they are. They're too smooth. So you have clean relative equal highs and clean relative equal lows. So I'm interested to see what price wants to do. Does it want to sweep out both sides? Does it want to fade this, utilize OTE of the current range and just roll over, utilizing the regular trading hours opening range gap as an inversion level to send it lower to sell side liquidity here? And you can see clean trend line sell side. And then, of course, eventually this low right here, which we have clean relative equal lows stacked. So all in all, the general consensus is that we have to remain neutral because we're at all-time highs. If we were not at all-time highs, I would be screaming shorts right now. I would be screaming lower prices, and I'd still be married to a bearish bias. But just because we are still near all-time highs, we have to fade short logic sometimes. Sometimes it could even be mechanically sound that we go lower, but all of that logic is disrupted because we are still at all-time highs. That's just unfortunately how we are. But as far as my bias is concerned, I am neutral, but I have laid out very specific parameters. If we trade above that high that I outlined on the 15-minute chart, let me go back to the electronic trading hours. If we trade above these highs and we close above this SIBI on a closing basis, right? If we get above it on a closing basis, then I'd anticipate all-time highs would be the next stop. If we get above this high or we get anywhere close, then I'd expect all-time highs would be in favor. If we look at the daily chart, like I had mentioned, if we don't get back to this suspension block, I'm going to assume we are bullish. If we get beneath this low that's nestled inside of the daily suspension block, then I'd assume lower prices. Now, just very quickly, we'll take a brief look at ES. So you can see this is what ES is looking like. In my opinion, you look at ES, it looks a little bit heavier, but there's not much that's changing in terms of analysis. Same thing remains on ES as does on NASDAQ. And then here we're taking a look at YM, and YM has purged this high while both ES and NQ failed to do so. If we do start rolling over, that would be a higher time frame SMT, meaning that would be setting something up a little bit more significant longer term. Then we're looking at dollar here. Dollar is supposed to have an inverse relationship with the indices. And if you're telling me that this does not look bullish, then I don't know what does. Dollar 100% wants to get to this high. This is also why I'm super confident in seeing price roll lower on the indices. Because you can see when you're looking at this chart, I mean, dollar looks exceedingly bullish. Not one bit can you make. You can't even make an argument for price going lower at this point on dollar. So if that is true, if that analysis does remain true and we do target that high, I would reasonably expect NQ, ES, and YM to work lower with speed. And we're sort of at that area. Like, imagine this is a 1 minute chart. Forget that this is a daily chart and I happen to be in a trade. The fact that we got above this high, I would be anticipating for us to really start accelerating through it and then to this high. And if we can get that, of course, we would expect a really heavy week on all the three indices. So, dollar does reaffirm a bit more bearish bias, in my opinion, for the indices. But like I said, I'm just going to remain neutral and I'm going to fade trying to call anything specific. But either way, that is the plan. That is how I'm going to take on price action for this upcoming week. And I'm sure a lot of you guys are probably in agreement with me. So if you are, just go ahead, drop a comment. If you did make it this far, thank you so much. Leave a like. And yeah, I will talk to you guys soon. Peace out.